do a quick swap over of humans.
Also notes HP Enterprise with a dollar benchmark. 4-part offering.
Yeah, so if you're watching this stream and you can see behind us, these are our scholarship students. So we've taken on 4 or 5 scholarship students, and they are solely trading fundamentals here. So they are, yeah, they've got basically accounts and they will just solely trade on news. So hello Chris, how are you?
Yeah, good, thank you, Russell.
It's been a whole week since you've been on the stream, and it's been quite a lively week, hasn't it?
Yeah, we had a lot
trading
last week.
wise.
A lot last week. Non-farm payrolls being everyone's main course last week, I think.
So how have you done with the whole trading space last week?
Yeah, I was kind of easing myself back in last week, having been away for a few weeks. So yeah, managed to get myself back under the desk in time for non-farm payrolls.
Okay.
Even on Thursday, I was trading a little bit. Actually, it was quite a bit of a busier day than I was expecting. Thursday, often the Thursday before non-farm Friday can be a little bit quiet. Not last Thursday. There was a big rally on Thursday, but then Friday was just a gift.
Yeah, I heard that last week there was some not even some red label news events actually causing quite a stir as well. So one of these guys were telling me.
This is what we talked about this even before I left for the summer holidays. On the earlier podcast, we were talking about the fact that this summer might well be like quite a good news trading cycle.
Okay.
Because we were in that period where we weren't sure whether there would be a rate cut in September or not.
Okay.
So it was kind of priced 60%, 70% one way, 30-40% the other. And it was always going to be the data that Fed always talk about being like data dependent and what have you. It was always going to be the data that influenced them to pick one side or the other.
So that there is another cut coming up soon, right?
Well, at least this is the consensus from Friday. So we had last week it was priced 85% chance.
There is a
PC
cut. If you want to go on the PC and show anything as well, like the normal podcast. So it's just there. It's just an option.
Yeah. Well, I can show you I think the changes won't be that dramatic.
So there you go.
Yeah. So the Fed rate monitoring tool. I'm on the wrong keyboard here.
Oh yeah, sorry. I've got 1,000 keyboards and 1,000. Yeah. So I'll put the put this up.
Yeah, so a really free and easy way to look at this. You can do this through the Fed Funds futures charts if you have. You don't need the live futures charts to be fair to get them. But this prices in how many cuts is priced in by this Fed Fund futures market. Got to trust the market on these things, I would say, rather than the central bankers. The market tends to be more right than even the economic forecasters in these things. And the market, if we looked last week, it was up a little bit from where we were earlier in the summer. We were up to an 86% chance of a rate cut last week.
Okay.
And there was still a 13% chance that we were getting a pause.
Okay.
Fast forward to non-farm payrolls, 22,000 jobs created, way lower than forecast, lowest we've seen, second lowest we've seen in years. It was the lowest forecast since January of 2021.
Right. And
it still didn't meet those forecasts. So now we are, judging by this, 91% chance of a rate cut. But now there is, and this was 10% this morning, down to 8.3% today. At this time in the afternoon, that we're actually going to get 2 cuts, or effectively a 50 basis point cut. So that's 1 week, 2 days. Next Wednesday evening, we obviously do a live Zoom through that. If you want to join us for that one, expecting, I think is going to be a 25 basis point cut. 91% priced in. Why argue with that? But it's going to be an interesting night for sure. I think there will be some Fed members out there.
Yeah, because it's quite late, isn't it? Or is it? Sorry, boys. What's going on this week that you're coming in late for? Something happening this week, I think. Next week is that the rate cut?
Yeah. So we'll be in the office. Will be busy Wednesday night, 7 o'clock for the rate cut. That will move the markets because it's also a dot plot rate cut. So we get 8 rate decisions from the Fed every year.
Yep.
4 of them you get dot plots, which is a view of all of the voting members where they believe the rates will be at the end of this year, next year, the year after, in the long run. So it's not just Powell we'll hear from. We'll actually see, apparently it's not name by name, but we'll see where all of these different voting members think the rates will be by the end of the year.
Yeah,
there's going to be 2 more rate decisions before then.
Yeah.
So some of them, I think, believe that there might be 3 rate cuts before. Some of them might even suggest 4. Maybe they want 2 now and then another couple. Whereas Powell's been pretty straight that pause till Jackson Hole. I did miss all that, but I got the impression that he was saying rate cuts could come. But
Trump
now,
will love that.
yeah, Trump will love that. Maybe well, he's going to keep his job. You would have thought at this stage till May of next year anyway. Yeah, the feeling is that some of these Fed members might even want to put themselves in pole position to be Trump's spokesman for the Fed going forward. So be the most dovish member out there. If they have any ambitions towards being the chairman of the central bank, a woman, then maybe they need to amp up these rate cuts, or at least say that they're going to do that, and that will maybe put them in line with what Donald Trump might like from the next Fed member. Someone who's going to massage the economy higher and massage these rates down. And already we've seen the rates drop, right? We've seen the 10 years gone from what 4.3 last week to just above 4. It's already plummeting. So yeah, we're in the start of that rate cut cycle. It just doesn't happen.
So it's a question here from someone, Zito. He's asking whether you think that the market has already priced in the rate cuts.
Newswire reports that Japan's.
That's not to say, yeah. I mean, it is. I mean, you can see that from the data. I mean, they're pricing in more than one rate cut. That's the reality. So yes, it is priced in by the Fed funds futures. That doesn't mean that stock markets can't continue to push higher over the next few weeks. We are seeing, volatility, and I still expect to see, if we get, a rate cut, I still expect volatility after this, because it isn't just about the rate decision next Wednesday, as I say, because we have these dot plots. So one of the 4 per year where we get this information from all the other Fed members. This will be one where at 7 o'clock we get volatility. I will likely hit a trade at 7 o'clock, and 2-3 seconds. We'll see how fast the fingers are.
No, these guys will be here to do that as well. So.
Right. So these are the ones, if you're going to trade at 7 for these figures, these are the ones to do it on. The ones where you don't get a dot plot, so that will be the one that we get the end of October, early November, that will not have this dot plot information. So the information that we get at 7 will just be the rate decision and then the edited statement, which often doesn't say a great deal. So then those trades at 7 o'clock, not as fruitful, historically. So they're always 7:30.
So for somebody who is trading dot plot decision, rate decision for the first time, what would be your advice on how to exactly trade it?
Well, yeah, understanding the fundamentals is important with it. So understanding where the market is priced. So, for example, the image we showed you of that Fed funds rate predictor, knowing whether it's rewind a week. If we had 86% chance of a cut and 13% chance of a pause, then a cut kind of beats the median expectation. Okay. Now, a single cut is actually quite hawkish, because we now have a situation where just under 10% of the market now think there should be 2 cuts. So a single cut is actually more hawkish, as in, yeah. Without getting into the dovers and hawks, are you familiar with this?
Yeah.
Will be?
Yeah, but
you can ask Zito, I guess, if you understand dovish and hawkish.
There's actually, when does the embargo start and then talking?
Yeah, so the blackout starts this week, so I won't be hearing from Fed members much this week.
Okay.
Certainly through the end of the week into next week, it's all done. I think they may be off now. I've not seen anything on the
Can they talk at all about anything?
They're allowed to talk to their wife.
But are they allowed to go on media at all?
No. This is Fed blackout. You might get them opening a, ceremonial opening of a new Starbucks.
Maybe you could tune into their Starbucks opening and read the undertones of how they might like their coffee. Might be the decision.
Maybe. What would you say? Yeah, if they're hitting a double espresso, what do you think they're going for?
That's definitely
Is that double cuts? Yeah, double cuts.
That's a very strong, because that's actually good. Why don't we discuss how the dot plot works? Actually, we could let's actually just
chat away. I'll find
yeah. Okay. Cool. Yeah. So what we're going to do is we're going to sort of like show you how the dot plot works. There's a great site. Well, there's probably a few. So, but we'll just get that up now on here. So 1 second.
This may not be the latest, but nevertheless, it shouldn't matter. Particularly, let's take a look on here.
Yeah.
So this will show where everyone of the voting members, 19 voting members, where they believe the rates will be granted. This is a long time ago, to be fair, but hopefully it's a good example for you anyway, where they believe the rates will be at the end of each year. So obviously we know what the rate decision was,
yeah,
because there's 19 members for a reason, typically, because it creates that odd number that can, if it's 50-50, that
right,
odd number gives it the voting number. These days, yeah, I mean, it probably is going to be 50 between these two positions. But then it's more information because it tells you where they think the rate cuts will be by the end of the year. Now, if I believe we're in September now, quite which one this was, but normally this isn't unusual to see pretty narrow forecasts on this stuff.
Okay.
But I would expect to perhaps see spread of maybe 3 or 4 different rates from different voting members. Again, it doesn't tell you who's who.
Okay.
They'll be very keen to come out and tell you, I'm sure, afterwards what they would have voted for and why.
Right, okay.
So then, yeah, the cycle of hearing from these Fed members starts to pick up again immediately after the Fed announcement. So we'll hear from them on Thursday, Friday next week again. Busy again through the following week. So it'll be a really busy week in the aftermath of the Fed. But it'll also tell us where they think they'll be at the end of 27, well, where they believe these are. So what you're looking for with this is, we'll have this on the call at the time, is the previous dot plot. So one that we had not in the July meeting, the June meeting, where was everyone positioned for end of 2020? Now, where is everyone positioned?
So how the sentiment has changed, basically.
What has changed?
Yeah.
I've got no doubt it's lower as an aggregate, no doubt. Because there was a lot of just steady as she goes, kicking the can down the road sort of chat before the summer began. Now it's very much action stations, it's happening. So how much is it happening? This is going to be an interesting runoff because we've seen in the UK when they started cutting rates, they did rate cut, rate pause, rate cut, rate pause, rate cut, rate pause. Very, very British, very conservative. Where
were we with the last one?
So where are we now? We're knocking at 4 now, so we're slightly below the US at 4.25.
Okay.
But we have steadily got down here, and our inflation's higher still than theirs. So,
yeah, I mean, yeah, we are. We're definitely feeling it in this country. Yeah.
Yeah, I think the thing that you'll notice is that this change from the end of 2025 dots will be lower than what we saw at the last meeting.
Okay. How
much lower? It's aggressively lower, then that is really quite dovish for the market. If the majority of members believe that this isn't just going to be a cut pause scenario, which it doesn't really look like to me. They have obviously done some rate cuts. They were up at 5.5, they're now to 4.5, and then they paused for 4 or 5 meetings. It would be unusual for them to just do one cut and then pause for another 6 months, in my opinion. I feel like this is a real ramping down. Given the jobs market is struggling, and tariff issues are likely. You listen to Jamie Dimon thinking they are going to filter into the market come the end of this year into 2026. There's a lot of headwinds out. And in fact, I was just looking at before I came on while you were chatting nicely about golf with Enzo, into Darius Dale, a good guy on Macro 42 Macro is his company. He's a really good fundamental kind of macro analyst, and he was saying if you take the participation rate of this jobs market and make it the same as it was in the year 2000. Right. It feels like a similar sort of world, right? I mean, maybe to me, I don't know. It feels like a similar world. Because the normal kind of typical working age rate of employment, that would actually be at 5.2% on those figures compared to what we have now. We just have a lot of older people in the workforce, basically because they have to be to make ends meet. So in reality, this 4.2, 4.3% unemployment rate that we're reading, it's actually way higher compared to historical standards if you account for these changes in who's in the employment world. So these demographic changes, maybe they're not being looked at too directly by the Fed. Maybe Powell isn't, and all these central bankers are just hard numbers. Unemployment rate is super low still relative to historical norms. So why are they rushing to cut rates? Well, maybe it's going to be a case, and this is what we had back in the 2007-2008 period, great financial crisis, where the rates just fell off the cliff.
Go to zero.
That's what happened then.
Yeah.
I don't see it. Glad that I didn't see that. So it could happen, and maybe they always say, and Powell had bullets thrown at him many times from Trump about too late, Mr. Too Late. Yeah. Or he just calls him too late now, doesn't he, in inverted commas? Yeah, central bankers are always too late. How? This is always the case. So maybe they will have to do something.
I think Trump is slowly trying to take over the Fed himself single-handedly, right?
Yeah.
That's what he would like, wouldn't he?
He could, but then that undermines credibility in the whole thing. So then the whole economy credibility is called into question. I don't think that makes sense. I think they'll try and style it out. Maybe get one of his cronies in to do it indirectly. But then he's just counting down the months, right? We've got what, 3 years and 3 months left.
Wasn't that tactic kind of deployed in Turkey now on like hyperinflation? Is that a thing in Turkey?
Yep.
Yeah.
Again,
So it just doesn't work. Yeah.
No. Why would you let someone whose interest it is to boost an economy, especially into an election, in order to just dial the numbers up, turn it up to 11 at the right time with no care? This is the problem with the political cycle, that it's 4 years cycle, right?
Yeah.
I don't care what happens 12 years from now, or even 5 years from now. It's about getting elected today, and then we're in. So, that's why you don't want them.
Yeah, this is kind of what sort of like confuses me about all these tariffs, is that he's bringing all these in, but he's never really going to sort of like reap any kind of benefits from them. I think his motivation is to try and bring things back, make America great again, bring all manufacturing and stuff back to America.
I don't know. You got to question.
But they haven't got the infrastructure, right?
Got to question his core beliefs,
right,
versus negotiation standpoint. Right? What is this? Is this a true fundamental core belief of his? Now, he wrote an article in the 80s saying that tariffs should be enforced.
Okay.
So this is a core belief of his, has been for decades.
Okay.
But he's also a heavy-handed negotiator, right? He likes to come in hard and then pull back, right? So they say.
Yeah.
And so maybe this whole thing is just to try and strong arm other, likes of India at the moment. Modi's cozying up a lot to Putin, like that. He wants Modi to stop taking oil in the way that they're doing and stop kind of funding Russia in the way that they're doing. So he's using this as a political tool. So I don't know the answer, but the question is this something he truly believes in? If that's the case, I think he's an idiot, because tariffs don't work.
Yeah.
The US has been the most successful economy in the world by having the lowest tariffs. So if by turning tariffs up to where other countries are, it doesn't really work. Look at us. We are in a worse position than Europe post-Brexit in terms of inflation, because we voted, but people on aggregate voted to effectively pay more for things from Europe.
Yeah.
Okay, to get back some of our powers, but in essence, we were always going to pay more, and we have been since. So this hasn't gone well for us, right? Successive governments have been struggling, so it doesn't. Even in these modern examples, it doesn't work. But historically, it hasn't worked. So I think it's a bad idea. And if you look at the manufacturing PMIs in America, they're below 50.
Yeah.
6 months into Trump getting things going in the manufacturing sector, it was huge in January when he came in, and now we're back to below.
Well, I think even with manufacturing, they have to import, raw materials, which they're also going to have to pay tariffs on as well. So hang on a second. Just have to do something. Find the right mouse.
Okay, yes, we need to get off here shortly for the Open.
Yeah.
Could be an interesting one. People have had the weekend to digest what's happened this week. Last week. So we've had a lot of news. ISM services were actually way better than forecast, but everything else was worse. JOLTS, ADP, ISM manufacturing, non-farm payrolls. It was a shit sandwich of a data week. So
oil definitely. There was some movements, quite large movements in oil.
Yeah, oil's rallying strong today. There's some chat that the OPEC cuts aren't going to impact. They're not going to be able to do the cuts that they were hoping to do.
Yeah, because they're saying that they're going to up manufacturing.
Supply, you mean?
Supply.
Yeah, they want to, but apparently on Sport Today they were saying that it's unlikely they can actually reach the numbers that they want to reach.
So that rally is due to people's not believing the situation.
Yeah, or maybe not believing, knowing that they cannot do the cuts that they want to do, so therefore supply will still. Who knows? I mean, the rally's just a bit of a counter rally to last week. It got its ass kicked. I think we've got a bit. What happened
with oil last week?
Well, we had that struggle. It was the rumours of this.
Oh, okay.
Was coming in. Numbers. Saw it. If you look at the oil chart, I don't know if we can bring it up. Maybe not.
Yeah, of course we can.
Yeah. Look at it was
if I
pretty
can
horror,
find the right
horror show before the Open. We were all keeping our eyes on non-farm payrolls, whereas actually oil is getting slung around by what it likes to be slung around with.
It's on oil as well. I'll just press connect. It's someone else. Might be another chart.
Yeah, so we obviously got the non-farm payroll figures at 130. So you think this is the thing that moves markets, but look what happened to oil slightly later. You have all this volatility in oil. And it was if you actually move it to, probably zoom in a bit, you see how much of a horror show this was. It went all the way back, right? It snaps all over the place. A horrible market, but it did bleed out a little bit on Friday. You have a pretty nasty kind of end to the European session. And it's bounced back really well today.
Yeah,
we're seeing oil kind of retaking these sort of, not quite taking them, but going back into where it all began last week. So yeah, really, really interesting market to trade today. I think I'll be looking at gold though, all-time highs. I posted again today. Yeah, don't sell all-time highs, they say. I won't be. For opportunities to try and buy in if we get the chance. We've got the gold market reacts pretty well at 230 as well for stocks. And yeah, just see what the stock market makes of this change in everyone's sentiment around the Fed. I think the rate cuts are coming. If we are going to get high inflation and rate cuts, then this is just like the perfect storm for asset prices to go up. So gold, stocks, I think they just all go up.
Okay, cool. Thank you very much for your time today, Chris. Appreciate that. And
cheers for the comments, Zito.
Yeah, thank you very much for joining us. We're going to call it a day there, but we will be live again tonight at 8 o'clock, and that is for our weekly webinar. We normally do it on Tuesday, but Jerry is going away this week, so we're going to get it done this evening. So feel free to join us on there across all platforms. Thank you very much, and have a good afternoon.